Welcome back, and today we're looking at another offshore drilling play. This time it's diamond offshore drilling. Now, we're not going to cover the thesis, but just very quickly, most of the reserves from the big producers are now offshore. Offshore also has a better cost break even than shale. So we believe, and you can watch the previous videos, that most of the revenue, most of the growth in oil will come from the offshore sector. Now, Diamond, much like its peers, has just emerged from Chapter 11 bankruptcy. So the senior debt holders have now become the equity holders. So that does give us some safety of margin, because of course these new equity holders want to not even make some of the money, but at least retrieve some of the money back that they were holding as debt on this company. Chapter 11 also provides the benefit of wiping out most of the debt that was on the balance sheet. Current to date, the balance sheet is looking quite good for Diamond, and it only has around 200 million of debt, which is long dated debt as well, so it won't mature for quite some time, which gives them plenty of room to really capture this uptrend uptick in the offshore supercycle. The first point we'll look at with Diamond Offshore and why we are bullish on this company is firstly the valuation that is placed at the current market cap today of this company. We believe it is much lower than its book value, and we're going to look into exactly why that is. So the following chart is very useful for us in gauging the valuation that we shall place on Diamond. So in green we have the sellers and in blue are the buyers. So let's take the example of the drillship 7th generation strategic. So the buyers are offering around 180 while the sellers are willing to sell at 200. Now keep in mind these are not just some arbitrated numbers that some analysts came up with. These are actual real life examples. So at the moment 7th gen drill ships are going for the 200 to 180 million mark. It is further illustrated in this slide where we see the modern drill ships are going for an estimated value of around 200 million. And interesting, if we see the 2023 valuation where we expect day rates, which we have already seen, to hit that 400k level, utilization also creep up to that 85 to 95%. Those drill ships are being predicted valuation of 450 million. Now we're not even going to go out to that valuation. We're going to stick with the current valuation of 200 million for a modern drill ship, and we're going to check how many drill ships Diamond has and what the current market cap is and determine what the fair value of this is. Okay, we can see from their website that they have 8 semis and 4 rigs. Now let's go back to that previous slide and see what the valuation of each of those is. So the valuation in 2021 was 200 million for drill ships and 100 million for the semis. Now let's just do some very basic maths. 8 semis times 100 million gives us, of course, 800 million. 4 drill ships times 200 gives us 600 million. Just based on those two assets alone, the company should be valued at around 1.4 billion. We assign a market cap of 1.4 billion. Shares outstanding is 100 million. So the market cap divided by shares outstanding gives us a stock price of $14. Just based on those two assets alone, the rigs and the semis, the valuation of this company should really be in the range of 1.4 billion. Today the stock is trading at 921 USD with a market cap of 939 million. We do believe that this stock is considerably undervalued given our calculations. We also point out that we did not factor into any of the future cash flows, i.e. increase in day rates, the scrapping of potentially old rigs, which will increase the tightness of the market and also increase the value of the current operating rigs. So we've taken a very base case scenario of just the assets that they hold today and what that should represent as a valuation of the company, which we believe it is trading under. Full disclosure, we do own a position in this stock and we are happy to add to it at this level. Again, this is not investment advice. This is just my thoughts and what I'm doing. I'm not telling anybody to buy. I'm just sharing my research.